Hey guys, how's it going? It's Breakout Bag Lunch. Today is April 10th, 2026. Happy Friday. I'm happy to say that so far we are in the green or up a little over $180. So it's not a huge profit, but it's a profit nonetheless. And I'm especially glad that this happened during a choppy market, at least at first. Previously, on days like this, I would just blow my account and have huge red days, but that did not happen this time. I'm going to talk about what I did differently today and next steps from here. Full disclosure, I did blow a combine that I was working on yesterday. I think I'll try another combine next week. Today, though, I only traded my express funded account, and also you might notice we have the Bollinger Bands here. I don't trade with Bollinger Bands. I've been using the VWAP wave system recently, but honestly, just looking at these bands, the bands actually act similarly to the two standard deviation bands of VWAP. So I just keeping in mind that I use the VWAP bands, you can kind of get an idea of the types of trades I was going for. Mostly mean reversion, since we've been in a choppy market environment today so far. Just like with yesterday, though, I'm going to switch over to Thinkorswim so you can see the thought process behind my trades with the VWAP wave system. So without further ado, let's switch over to Thinkorswim. Alright guys, welcome to Thinkorswim. I'm going to go right into the trade review. So it looks like we were trying to continue the bullish momentum that we've been experiencing over the past several days. Just looking at the 1 hour chart. Now, we did have some important news come out at 8:30, specifically CPI, which came in very hot. It hasn't seemed to phase the market throughout the pre-market session. We weren't seeing too much of movement other than this large spike, which quickly got sold back down. So overall, wasn't really too strong of a trend. Wasn't really, at least for the pre-market session, wasn't a strong trend. In the medium term, we're in a bullish trend, but just in terms of the pre-market trading, we weren't in a very strong trend. So it didn't have a strong bias either way. I was thinking we'd see possibly a lot of fades and choppiness, which was the case. If we go down to the 1 minute chart, which I use for my trading, I'm just going to get rid of volume profile to make this clearer. I haven't been really using it anyway. Okay, so if we go to 9:30 open, you can see here that we did have this move that was the high of the 5-minute opening range, but this is also a bearish candle trying to break out of the 2 standard deviation band of VWAP. And since this breakout failed, or it showed weakness with this candle, my bias was to go short. So I went short at 9:34. Once we got more rejection, at first the trade was working well, then we had a spike up, and this is where I sold for about a $20 profit. Looking back, I should have held on to that trade. This wouldn't have been a huge trade, but would have been like $150 in profit. Not exactly sure how much, but patience would have paid off. And VWAP was my target, by the way, for this trade. Probably stop loss would have probably been like a point or two above this 931 candle. This caught me a bit off track because I typically don't trade the first 5 minutes of the market open, but I suppose these types of trades can pop up at any minute. All right, the second trade was at 9:55. Now at this point we had a bearish break below the 5 minute opening range, but we had this spike up, move up after we hit VWAP. And honestly, I do not like these types of trades where you have this type of conflicting information, because we have a bull bearish signal, a break below 5 minute opening range, and a bullish signal, a move above VWAP and a spike above VWAP. I decided VWAP was a more important factor to consider here, so I went long, and I got stopped out. I went long at 9:55, and I got stopped out at 10 a.m. So this candle here. Now we did go back up, but there was no way of knowing that at the time. So this trade was a loss. The third trade was another short. I had the right idea here. I just entered a bit too early. I entered a short at 10:17. So right here, I entered the short because we had this bearish candle at the 1 standard deviation band. Just keeping in mind that I was expecting more of a mean reversion type of day, and like I just mentioned, yeah, I entered this trade a bit too early, so I got stopped out. At 10:30. So this was a second losing trade for the day. Fortunately, though, the two next trades worked out pretty well. Now, once I saw that we had another bearish retest of this 2 standard deviation band, that gave me confidence to try to enter the short again. And in case you're wondering, I did not change my bias to bullish necessarily, because look here, we had two failed breaks of the 5 minute opening range. If we had like a big move up and then a retest and move higher, I probably would have changed my bias, but that was not the case today. So I went short, and I was targeting, actually this trade was interesting. I was targeting near the lows of the session. So 68, 65 was my exit. Yeah, my exit was right around here, and I'm not sure what happened with this candle. I think this was maybe some sort of news candle, or maybe not. We had a huge dump to VWAP. Then we had this move higher, and honestly, this is where I was getting nervous. But then I saw that we had another rejection here, a third rejection at the high of the 5 minute opening range. That gave me more confidence to hold on to this trade, and with patience, I did hit my profit target. The second trade, or I should say the fifth trade I entered, was more of just a continuation trade of this bearish price action. Now notice here how we're repeatedly testing VWAP. We might think that's a sign of strength, but if you're in a strong market and a strong trend, price won't repeatedly test VWAP this way. At this point, we've tested VWAP at least 5 times. It confirmed my bearish bias. I went short around here. Once I saw this rejection of VWAP, this is a VWAP rejection, and I was targeting down to the 2nd standard deviation band of VWAP, which we hit, and those are all the trades that I took. So what are the lessons for today, and what will I be taking away from this session and applying next week? Not just for today, but just thinking back and reviewing all the trades from this week. Well, I do like having the wider stop losses. They're not ideal, but I feel like they've been keeping me out of trouble recently. And this is something I've mentioned before, but something else I need to keep in mind is just exiting trades too early. There was at least one case when exiting a trade early worked out in my favor. That was yesterday for a trade I took later in the afternoon. But generally speaking, I just need to have more patience and wait to see trades play out rather than be afraid whenever there's a move up, like what happened during my first trade. The first trade was actually a positive trade, but it could have been a trade that worked out in my favor and hit my desired profit target had I just waited a bit longer. And the other area of improvement I want to mention is just the placement of take profit. When I see a rejection of like a 2 standard deviation band, I should probably target VWAP. I think that makes more sense. And if I had just had that VWAP target here, I could have been out of this trade a lot sooner rather than holding on to this trade with all this drawdown. Granted, the trade didn't hit my desired take profit area, but it would have been more profitable to just sell here and then buy around here when we had this VWAP retest and maybe target like a previous high or just below a previous high. Also, just while we're on that topic, this VWAP bounce could have worked as a short-term trade because we did reach the highs. This trade probably wouldn't have worked too well if I were trading this like a trend day and had like a higher profit target area. But this could have worked as a nice quick scalp. And finally, personally, I want to be more careful when I take these 1 standard deviation VWAP bounces. I don't know. It doesn't seem like they're high probability, at least for ES. In my experience, the 2 standard deviation bands have a higher probability in terms of mean reversion. Not that the 1 standard deviation bands should be ignored. For example, that sort of trade could have worked here, but typically price is really contained within 2 standard deviations rather than 1 standard deviation. And I just also want to mention that this week has taught me the importance of understanding what kind of market you're trading in every day, whether it's a trending market or a choppy and mean reverting market, because that's going to have an effect on the types of trades you're going to take. For example, if you're in a mean reverting market, and you can get an idea of what kind of market you're in just based on pre-market action or maybe the first 30 minutes of trading. So if you see a lot of movement between VWAP up, above and below VWAP, then it's more likely that we're in a mean reverting market. But if you see moves and you see price well above VWAP or below VWAP for a prolonged period of time, and you see like the higher highs and higher lows, then that could signal that you're in a trending market, and like break and retest trades will work better. And let's say like a break and retest of VWAP, for example, those trades are going to work better. And compared to if you're in a mean reverting market, then using the one deviation bands and fading the moves higher and lower is going to work better. So these are all important things to consider, and also the time of day and length of a trend. For example, in this case, we were in more of a choppy trading environment, but then it looks like a downtrend started to develop here. And this goes to show you that the longer a trend is in place, the more likely it is for that trend to change. You shouldn't expect a trend to stay a trend, because the market is always changing. You have to be aware of those types of changes and see and observe the type of market conditions, because that's going to play a big role in the types of trades you're going to take. And that's something I need to consider as well going into next week. Overall, not a super profitable, crazy profitable week. I had a great days on Monday and Tuesday. Actually, I'm going to switch back over to Topstep X to show you the calendar. Yeah, so here's the Topstep calendar. I can't show you Monday and Tuesday because those were combined trading days, but these were both max profit days of about $1,500. I was trading ES and not MES like I am right now, so you could think of those as $750 days. Wednesday was pretty solid. Thursday was okay. Friday is okay, a bit better than Thursday, not too bad. Hopefully things pick up and I can rake in some more profits next week. I'm going to do some more reviewing and charting over the weekend, but I feel as though I'm in a pretty good position right now, and stats don't look too bad right now. We have about a 55% win rate. Okay, I mentioned everything I wanted to mention today. As always, if you have any further comments or suggestions or feedback, please let me know. Otherwise, have a great weekend, and I will talk to you all next week on Monday. Bye.